has finally arrived that could mark the beginning of the end of unprecedented monetary stimulus. Yes, the markets have been waiting all summer for September 18th US FOMC meeting, and the statement tonight could have substantial effect on the global markets. In May, Ben Bernanke of the Federal Reserve indicated QE could be reined in, and despite the intention of indicating a strengthening global economy, stocks dropped and currencies were swept across the board as investors ran scared of going cold turkey. Since then, sentiment has improved somewhat, and even as the US central bank struggles to determine Bernanke's replacement, the question for many economists has switched from a matter of when tapering will commence to simply by how much. The consensus seems to be a reduction of $10 billion from the emergency bond buying scheme, but still questions remain after a recent mixed bag of data. As one BNP Paribas economist said, it's a very difficult decision for them to make. They've had a forecast for a pickup in growth, but it's not materialising. Much emphasis has been placed on the US achieving a 7% unemployment figure, but the Fed has vowed to take each data set as it comes in determining the pace of tapering. On top of all of this, the Fed will also publish its first economic forecast for 2016, and the stronger the picture, the harder it will be to persuade markets that any future rise in interest rates will only be slow and measured. But what does all this mean for your money? Well, according to Joseph Capurso, currency strategist at Commonwealth Bank of Australia, while the dollar may soften after the FOMC meeting, our medium-term view of a stronger dollar is unchanged. He also cited higher US yields and the divergent outlook for rates between the United States and other rich nations. Indeed, much of the tapering has already been priced into the market and has left some traders fed up of all the taper talk. Steve Englander, strategist at Citi, expressed the feelings of many when he bemoaned in a note the market's chronic fatigue syndrome, which is apparently an incurable contagious disease related to ambiguity in monetary policy. Well, viewers, that's all for today's press review. But to find out what the Fed did next and how the dollar is performing as a result, please do click back to Dukascopy TV for our early updates. Goodbye for now.